Welcome to Trader TV Equities, your insight into the trading climate for professional equity investors. I'm Dan Barnes. In June's show, we'll be talking with Enrico Cacciatore, Senior Quantitative Execution Trader for Voya Investment Management, about the way quant funds execute trades and the difference this has upon investment strategy and alpha generation. Enrico, welcome to Trader TV.
Dan, thank you for having me.
Now, when quantitative trading is used, does it change whereabouts in the investment process alpha can be generated?
Great question. I think the key thing about alpha generation is that it's all dependent on the alpha signal duration. So you'll have very high frequency trading funds that are looking at durations milliseconds to up to a day, to where you're looking at mid-frequency that their alpha signal might be hours to several days, or in the case of Voya, we're looking at months to quarters to potentially a year. So the critical thing about that is for the trading desk as they trade to understand what is that alpha expectation. And obviously, if it's a very short signal, we have to be cognizant of that and be much more aggressive in how we trade, versus we have a longer signal duration. We're much more passive in nature and willing to take time to execute to minimize that transactional cost.
As quantitative trading has become more predominant, how has that affected the skill set that traders need to have?
Quantitative trading is very process, systematic driven. You look at skill sets for quantitative traders, not only quantitative traders, but for the fundamental active traders, the need for programming skills, analytical skills, mathematical skills related to optimization. So you'll hear certain skill sets of Python, KDB, C++, R for data analysis, mostly because of the introduction and implementation of advanced systematic data science that's being utilized in the trading as well as in the optimization process for the fund managers.
I hear a lot about machine learning and artificial intelligence, often attached slightly in a hypey way to certain technologies being sold, but those are genuinely being used on quantitative trading desks.
Oh, 100%. One of the things that we've been implementing, because we utilize a lot of sell-side algorithmic solutions, is historically the trading desk has picked the broker, not only the strategy and other sub-factors, but also the broker itself. And what we've done is created what we call algo wheels. An algo wheel, essentially, the trader gets to pick the strategy and the urgency, and through machine learning, we will randomly choose brokers, and over time from the data set, it will determine based on urgency and strategies who is performing best, and then start to overweight those brokers that perform well. And so you reward those that perform well and you penalize those that underperform. And that's a basic machine learning technique, of which is a subcategory of artificial intelligence.
How does engagement in the equity market for a quantitative trader differ from engagement in the fixed income market?
The big challenge right now for the fixed income space is that it's evolving very slowly over time to be more transparent, more products traded and exchange traded products. And the challenge right now for quant fund trading fixed income products is that transparency, the interconnection of liquidity. And I think the response to that has been the growth in ETF products that express that exposure, that have liquidity, that is easily transacted for a quant trader to utilize. So I think the big difference is that liquidity and transparency and being able to trade electronically. And as time goes and as regulations change within that asset class, I think you'll see continued growth in quant managers on the fixed income product side.
And does the data that you need for trading each of those asset classes then have different characteristics?
As long as we can align the data and have efficient and clean access to historic data, it's really irrelevant what sort of asset class you're trading, and that's, I think, the key attribute.
And then finally, if investors are looking to invest with a firm that uses quant traders or has quant funds, what sort of questions might they ask to understand the processes?
I think that's a great question, and I think the key thing is the trading desk being an integral part of the process of alpha generation. The quant funds, they're using an optimizer. Within that optimizer, they should understand the trading cost, trading exposure, and for the trading desk to be part of that. And so the PM and the trading desk should be working in tandem, looking at pre-trade, post-trade cost, evaluating how you can do better, having an iterative feedback loop to improve that process over time, and being able to convey that to the investors of what you're doing, how are you doing it, what's your expectation, how has trading performance been. I think those are the key questions to be asking a quant fund.
That's been fascinating. Enrico, thank you very much for coming on the show.
Thank you so much, Dan.
I'd like to thank Enrico Cacciatore of Voya Investment Management, and of course you for watching. To catch our monthly reports on other markets or to subscribe to our newsletter, go to tradertv.net.